The bull run continued in the Indian stock markets for most of the last year. Stock options and IPOs were a dominant theme in 2021. Today we are going to discuss what the markets are expected to do in 2022. Will the market investors be taxed more in the upcoming budget, or will they be given relief? Also, can a common man expect, a common household, can he expect any relief on direct and indirect taxation? To talk about all that and much more today, we are joined by Ms. Gauri Chadda, tax expert from New Delhi, Mr. Jigar Mistry, co-founder Buoyant Capital from Mumbai, and Mr. Nadish Desai, co-founder Jago Investor from Ahmedabad. I'm going to begin with Ms. Chadda. Ms. Chadda, every budget that I have tracked for several years now, and which you must have also tracked, says that households should get more tax relief, there should be reduced taxation, this part of their income should be free from tax, etc., etc. What do you expect from Nirmala Sitharaman in this budget?
There are expectations are quite huge, and everyone is expecting that they should get some relief. But personally, if I talk about one thing, which is a deduction which should be given for corona warriors and the people who were affected with corona. So they should be given deduction, and it should be a standard deduction kind of a thing where whatever expenses you have incurred during your expenditure, during your hospitalization, or maybe during setting up ICU in your house or something like that, you should get a deduction. Apart from that, I am expecting that, because there's a culture called work from home now, so where employers are saying that you don't come to the office and you just sit at your home and work from there. So the expenses have gone up because people have set up their offices in their house. And they must have bought some furniture, must have incurred some business promotion expenses. They must have been paying higher electricity bill, Wi-Fi bill, and such things. So for this, I'm expecting a work from home allowance, which should give relief to the taxpayers. So these two things are directly related to COVID. And of course, apart from COVID, there are many expectations, but whereas I feel that they should focus on COVID first, and whatever is left over, that should be given to, in the form of standard deduction or basic exemption limit rise, or maybe 80C rise or something like that.
Thank you, Mr. Chadda. But and I agree with most of these things. These are very difficult times, and people have suffered a lot over the past 2.5 years. Those who were victims of the virus, but more so. And to that extent, what you say makes sense. However, don't you think that the debate we need to, India as a country needs to expand the debate where more people should be paying income tax than less?
The thing is that we have two types of taxes. Direct taxes also there and indirect taxes also there. So in case of indirect taxation, the burden is on everybody. Whatever you are buying, the burden is equal on the rich people and the poor people. It's the same. It's like if you're buying a pen for say ₹10 and you're paying ₹1 GST on that. So even if you have income of say ₹100 per month, or you have income of 1 crore per month, so that tax is same, that cannot be changed. That is one thing. Now, if we talk about direct taxation, so direct taxation is to be taxed more on the rich and less on the poor, or maybe not at all on the poor. So considering that fact, I guess that the people who are earning up to say 7, 8, 10 lakhs should be given some kind of relief. And see, basic exemption limit is 2.5 lakhs since many years. So it's high time that we should switch it to 3 lakh or 4 lakh or 5 lakh. And this will basically tax more the richer, more the tax, and less, the poor will be given some relief in the taxation part. So direct tax is supposed to charge more to the rich and less to the poor.
Thank you. I'll just come to Mr. Mistry. Mr. Mistry, the markets have been on a tear, although they seem to have flattened out over the past month and a half or so. Where do you see the markets going now in this year? Are we going to see some form of a continuation of the last year or the last 2 years? Or are we going to expect some form of stagnation here now?
question of markets is a little tricky one because, if we were to sort of analyze it in the form of cricket analogy, that's what I keep saying, that, we started year 2021 with a win in Gabba, which is considered a South African fortress. And we ended it with a win in Centurion, which is considered to be Aussie fortress was Gabba and South African fortress is Centurion. And, the equity markets were on a pretty similar role where, anything you sort of, the balls were so easy to hit that everything kept going for a 4 and 6. Year 2022, the calendar year we think is going to be very difficult because for a number of issues. Number one, we're likely to see interest rates sort of inch up higher and across the board. It starts with US, then I think the RBI just follows the template. And that will likely, put an ease to the easy money and liquidity that we are seeing. You'll also likely see all the risk of assets, being taken out, and therefore commodities, emerging markets, Indian equity included, is likely to suffer from some amount of deficit. So I think budget, will provide some amount of sort of roadmap into how the communication happens from an Indian standpoint. But I think markets, if you look at from a global standpoint, are likely to be very, very tricky this year.
So let me just ask you a follow-up question on that. Don't you think that the Indian markets, the Indian investors, are now strong enough to maintain the markets on their own? I believe it's $1.5 billion per month of mutual fund inflows in the equity markets alone. That's coming from retail investors. So yes, I understand the argument about rising interest rates and their domino effect across the world, more so to control inflation in the West. Not so much in India, but in the West. And there could be a liquidity suck of a few percentage points here and there. But don't you think that the Indian investors would more than make up or at least balance it out to some extent?
It's actually the question of the marginal investor, right? So if I break down the ownership of the Indian markets, about 50% is the ownership by promoters, which include governments. 22% is owned by foreign portfolio investors, right? And equity direct ownership is about 8%. Mutual fund, everything said and done, is only about 8%. So you are right, 45,000 crore total flows last month. If you remove the balanced fund and take the equity part of it, still 40,000 crore in one particular month is a very sizable sum. But essentially, if at the margin, you're likely to have, FIs yesterday on Friday sold something like 3,000 crores. The day before they sold some 4,000 crores. So then, it's the question is not how much who owns. The question is at the margin, who is the larger seller? And if FIs with a 22% ownership are largely the sellers, then we are likely to see some amount of liquidity issues. Now, on the other hand, liquidity is one part, valuation is another, right? Because if I, look at the way in which Indian markets have behaved and generally the temperament of a lot of investors around, then you are looking at valuations which are stretched across parameters, right? It's not just Nifty. Now, Nifty is likely to grow at by 34% revenues this year. Profits will grow about 25%. But that composition of earnings has changed dramatically. So it is commodities, companies like Tata Steel, Hindalco, etc., which are reporting a much stronger earnings. And companies which are traditionally higher P valued are showing much lower earnings, like Asian Paints, Hindustan Unilever, etc. So although the Nifty profit is growing, it is being contributed by companies that are traditionally valued at much lower valuation multiple. And therefore, the index as a total should actually see some amount of derating, which sadly we haven't seen until now. So I think next few months will be crucial. And I keep bringing it back on, right? The budget is a very important communications piece which needs to happen. And everybody would be looking forward for that.
Thank you. Thank you. I come to Mr. Desai. Mr. Mistry has given us a nice outline of the market, where the markets stand, what the valuations are, although the valuation argument I have been hearing for the last 3 years, but the valuations just kept going higher. The earnings began to follow. And at some point, the long-term India story is what is perhaps driving valuations even now, although there is nobody to say that whether it will continue or fall tomorrow. As somebody who sees to take care of investors' money through Jago Investor, what would be your advice to an average household today? Should they go for asset allocation? Should they realign their assets all over again? Should they exit the market given that the risk is coming? Should they stay invested for the long term? What would your advice be?
Well, my advice would be to stick to the asset allocation. I think asset allocation is the heart of the matter for a common investor. At this point, where the markets are, if there are any non-performing assets or funds in their portfolio, then this is a very good time to remove them and add the winners to their portfolio. So rebalancing is a very, very important action which investors should take at this point of time. And, markets will continue to, fluctuate because people have a lot of expectations from budget, but I think this is going to be a very, very challenging budget because people are facing a lot of challenges and even government is facing a lot of challenges at this point of time. So we are all like in a recovery mode. We are all like, coming out of the pandemic zone. And every year I feel, we are at the same place, so we try to innovate and then the virus again puts us in the same spot kind of a thing. But I think asset allocation is very, very important at this stage, and rebalancing their portfolio is something that a common investor should focus on.
So, Mr. Desai, you mentioned the budget. Is it really relevant in the medium-term scheme of things? Because every time, every budget says you should do this, you should do that, but it all gets evened out within less than a week. And so I don't know how deep the impact of a budget, a tax policy in the union budget will be in the medium to long term on equity. So I agree with your rebalancing strategy, but does the budget even matter?
Yeah, very good question. See, I always recommend to investors that you should write your own budget first rather than thinking about the country's budget, because the focus, people don't write their own personal budget and then they are discussing about the country's budget, so which is not in our hands at all. So there are policymakers and there are people who are there to design that. But a common investor should focus more on their inflows and outflows. If they manage their inflows and outflows more and more powerfully, I think that is a more powerful action than just talking about budget, because it's more like a flavor of the month kind of thing. It will stay here for next 1 or 2 months and then people will be back into their own life. So every year, I recommend to all investors, write your own budget first rather than just discussing about the country's budget.
Thank you, Mr. Desai. Ms. Chadda, I'm going to come back to you once again with a slightly different question, which is that, are you comfortable with so many tax slabs on the income tax, individual income tax area? We had with great difficulty managed to reach 3 slabs. After which the rate of taxation on those slabs was successively reduced. Now again we are back to a huge number of tax slabs. Does it help small households to negotiate so many complexities of the income tax slabs?
See, I'll tell you, first of all, now we have tax slabs also, and we have 2 tax regimes also. So one is old regime and one is new regime. So we have 3 tax slabs in the old regime and 5 or more tax slabs in the new regime. So in the new regime, we don't get any deduction and exemption. And in the old regime, we get deductions and exemptions and the tax rate is slightly higher. But it is very complicated thing, and usually people get confused. And to be very honest with you, I am expecting a figure from the government in this budget stating that how many people have actually shifted to the new regime, because personally I feel that the new regime is a total failure and it adds to the complexity, but it is not helping them in any way. And of course, there are few people who don't do investments or maybe who are not aware about the investment things, so they have shifted. And but the people who are into business, so they have one way to switch to the new regime, and then they can just once they can switch back to the old regime. Other than that, once they switch back, they can never go back to the new regime. So this is something which is hampering them from switching the new regime also. So of course, 2 regimes and so many tax slabs is not the way you can say that we have ease of compliance in India. So things are very complicated. For a layman, it is very difficult to understand the regimes, the tax slabs, and it's for us as professionals, it is very difficult to explain them and, pursue them to pay tax on this basis. So people think that we have tax rate at flat 30%, which is not true. First slab is at 5%, then it is at 20%, and then it is at 30%. And there's a lot of difference between 5% and 20%. So we have straight 15% difference there. So that difference is also quite high. So somewhere I feel these tax slabs and these regimes definitely need some attention, and they need to change something in this. And I am hoping that in this budget, definitely there will be changes in the new regime at least.
Thank you. Mr. Mistry, I'll come to you now. I want to mix tax and in equity investments. A lot of people invest because they want to save tax. Having said that, equities is a long-term investment. How do you see this as a conflict? Do you see this as a ticker? How do you see it? Should people even bother about taxation when they are investing? Because investing is a full-fledged science. It's a full-fledged activity. Why should you color it by trying to save a few pennies here or a few rupees there? Should you not just invest separately, do your tax planning separately and move on?
Absolutely. But before I answer that, if I have a 1 minute leeway, I just like to break it down for your viewers into where we sit, right? And then we'll come to the problem of, attacking the taxation on investments. Now, if I look at the government of India's account in a very laymannish term, after giving out what they give out to the states, they are left with something like 16 lakh crores, of which, subsidies, interest payment and defense cost is 13.5 lakh crores. Right? So of the government revenue, 70 to 75% is something you cannot do anything about. You're left with 2.5 lakh crores, and you add RBI dividend, that's another, or add all dividends, that's about 2 lakh crores. So 4.5 lakh crores is something that you have to spend, and your revenue expenditure is 16 lakh crores, right? So you're borrowing 12, as a government, you're borrowing 12 lakh crores just to fund your revenue day-to-day expenses. Now, Nandish will say that that's a very immature way of running a household, let alone a government. Add to that, you're borrowing 5.5 to 6 lakh crore to fund your capital expenditure, and part of that, about 2 lakh odd crores, you are doing a disinvestment plan. So you're sitting on a fiscal deficit of 15 lakh crores. Now, come this year, you would have collected a lot more income tax, but your disinvestment proceeds did not flow through. GDP growth was stronger, so you'll still end up with 15 lakh crores. Look at that with what's happening to the rest of the world, because India is not alone in terms of, communicating its fiscal stance. On one hand, you have China, which is actually driving this common prosperity drive, where it is, hitting out on this big high-flying companies, Meituan, which is the food delivery app, or Didi, which is the taxi sharing app, or Tencent and Alibaba. And they are actually sort of making investors lose close to $1 trillion just to make the point home, suggesting that, look, here we are trying to even out the scale. You'd remember Richard Nixon doing very similar in the 80s in the US. But this is what, India is up against. Now, your tax collection to GDP ratio is 11% this year, likely to be, right? Not budgeted, the actual. And that means that the unorganized sector has grown so far out that the organized sector has grown so far out that the unorganized sector has actually had to feel the brunt. So as a government, with borrowing so much, what I would be expecting them to do is, announce a lot of soaps for the, lower strata of the economy, unorganized sector on the one hand. And on the other hand, you would be expecting them to, put up all the capex plans, 180 trillion, 180 lakh crore of projects are, waiting to be invested somewhere. You already cut the corporate tax rate in August 2019, and corporates are not moving. So it is incumbent on you to do it. Now, as an investor, I'm faced with a very unique dilemma that if I am holding an investment for 364 days, I am a short-term investor. And if I'm holding it for 366 days, I'm a long-term investor. I think, it's a very unpopular opinion if I go ahead and say it, but this sort of distinction should be removed. Everything, you're making money, you should just pay your taxes, and don't think of investments and club it with taxation. Just, even out the tax, 10%, 15% doesn't matter, but just make it one line of tax that sort of, allows people to move away from this sort of buy and hold philosophy, which is very unique to India again, and just segregate investing from the taxation part. Taxation is something that you don't just plan. You invest in the way which allows you to generate the highest returns on your investment, and then whatever taxes due, you just go ahead and pay it.
Thank you.
So sorry for the long-winded answer.
Mr. Desai, would you agree with that? Do you think the two need to be demarcated away as two unique decisions? One on the investment side, one on the tax.
Well, that's on everyone's wish list. But now in India, there's nothing which is not taxed. We need to pay tax on everything. In fact, if I work and get a salary, I pay 30% on it. And if I make my money work, I pay 10% on it. So that's the hard reality. We have to face it. And, but I expect some kind of innovations in the taxation aspect rather than removing it from or making them separate. So things like if there is an ELSS fund, which is an equity linked savings scheme, there can be a DLSS fund, debt linked savings scheme. So these kind of innovations we can do in the taxation front, which encourages more and more investors to participate in a very, very simple way. This is what I would recommend.
Thank you. I'm going to seek out closing remarks. Gauri Chadda, what is the one thing that you would like in this budget?
One thing, if you ask me, then of course raise the basic exemption limit, because that would benefit each and everyone. And or maybe you can just get away with the new regime, stick to the old regime, and increase the ATC deductions. So either of these two would be a welcome step for each and everybody.
Jigar Mistry, what's your one thing that you would like in this budget?
I would want, the government to stick to the glide path, but, make it a steeper glide path. So next year, you continue to borrow something like, 13.5 lakh crore. The companies aren't spending yet, so you go ahead and spend, you support the lower strata of the society. And then, your budgeted estimate comes down to 5.7% of GDP, and you go to 4.5% only in 26. So do the front-ending capex and spending, and we'll think of conservatism a couple of years down the line.
Nadish Desai.
Yeah, I am expecting a brave budget. I'm expecting some brave steps to be taken rather than a pleasing step, because now elections are ahead, and I don't want the budget to be a pleasing budget. It has to be, a nation-building budget. And as Ms. Chadda said, the basic limits, I think they need to be relook at it very, very seriously and increase them, because 1.5 lakhs, the basic taxation limits, it needs to be relooked completely. Like, it has to change completely now. And simplification, like old tax regime, new tax regime, it's very, very complicated. So simplification is something which I really expect.
Thank you very much, Ms. Chadda, Mr. Mistry, Mr. Desai. Thank you for joining us.